Let's take a look at some of today's news. Stocks making the biggest moves after hours. Fubo TV, Open Door Technologies, Electronic Arts, and more. Electronic Arts, the video game company stock fell 0.7% after EA reported earnings of 26 cents per share for its fiscal fourth quarter. This figure was not comparable to estimates. Electronic Arts made $1.49 billion in revenue, topping a Refinitiv estimate of $1.39 billion. Fubo TV. Shares of Fubo TV soared more than 24% following the release of the company's first quarter results. Fubo TV reported a loss of 59 cents per share, which was not comparable to estimates. The company made $119.7 million in revenue, topping a Refinitiv forecast of $103.9 million. Now, Fubo TV is one that I was seeing today, and wow, if you guys watched it, it went all the way down to around $14.50, and now after hours, it's above $21. So Fubo TV, massive dip buying opportunity today for those of you who got in. Open Door Technologies. Shares of the online platform for buying and selling homes gained nearly 2% after Open Door posted a loss of 48 cents per share for the previous quarter. That figure was not comparable to estimates. Revenue came in at $747 million, topping a Refinitiv forecast of $620 million. Now let's go to VZO. VZO shares slid 6.2% after the company posted a profit of 2 cents per share for the first quarter, which was not comparable to estimates. Revenue came in at $506 million, while analysts polled by Refinitiv expected sales of $484 million. VZO also said smart TV shipments came in at 1.5 million, below a FactSet estimate of 1.65 million. Now let's take a look at Palantir. Palantir stock bounces to snap 10-day losing streak, says now lets customers pay with Bitcoin. Company beat first quarter revenue expectations and gave better than expected forecasts for current quarter. Palantir Technologies topped revenue expectations Tuesday morning while announcing that it might consider adding Bitcoin or other cryptocurrencies to its balance sheets. The data integration and software company reported a fiscal first quarter net loss of $123 million or 7 cents a share, compared with a loss of $54 million or 10 cents a share a year earlier. After adjusting for stock-based compensation, Palantir earned 4 cents a share, whereas it posted a 1 cent adjusted loss per share. The FactSet consensus was for 4 cents a share in adjusted EPS. Shares bounced 7.2% in midday trading Tuesday, reversing an earlier intraday loss as much as 7.6%. The stock is now on track to snap a 10-session losing streak, which has been the longest since it went public on September 30th. The stock had tumbled 23.4% during its loss streak. Palantir's revenue for the fourth quarter rose $341 million from $229 million a year prior, while analysts tracked it by FactSet were projecting $332 million. The company added 11 new commercial customers in the latest quarter. Where the government response to the pandemic has been efficacious, we are seeing a commercial tailwind. Chief Operating Officer Shyam Sankar said on the company's earnings call, highlighting an 83% increase in U.S. government revenue. Chief Financial Officer David Glazer said that Palantir now offers customers the option to pay in Bitcoin, and the company is considering adding Bitcoin or other crypto assets to its balance sheets. It's definitely on the table from a treasury perspective, as well as other investments as we look across our business and beyond, he said on the company's earnings call. For the fiscal second quarter, Palantir anticipates revenue of $360 million, whereas the FactSet consensus calls for $344 million. The company also expects an adjusted operating margin of 23%. The company continues to project annual revenue growth of at least 30% for 2021 through 2025. Shares have fallen 40% over the past 3 months as the S&P 500 has risen 6%. If you enjoyed this video, make sure to like, subscribe, and hit the bell to get notified for my latest videos. If you want to get 2 free stocks, try Webull. Get 2 free stocks when you deposit $100 or more. To get the most up-to-date high-growth stock news, my latest buy and sell alerts, and smart money market sentiment, check out my Patreon. It comes with private Discord and a full range of server benefits. All the links will be below under the description of this video. Now let's take a look at some of the recent IPOs and how they're reacting to this market sell-off. Honest Company, a firm among once hot IPOs stung by sell-off. The market sell-off is stinging some of the hottest stock to recently go public. Jessica Alba's The Honest Company tumbled below its initial public offering price for the first time on Tuesday, a week after the stock surged by 33% in its debut. Other listings like Airbnb, Affirm Holdings, DoorDash, and Coinbase also slid after hot debuts during the past year's rally. The weakness in some recent debuts could dampen enthusiasm for offerings still in the pipeline, with at least 7 IPOs expected to price this week, according to data compiled by Bloomberg. Affirmed the consumer lender briefly fell below its IPO price on Tuesday, dropping under $49 less than 4 months after shares surged by 98% in their debut session. One of the biggest pops since the 2008 financial crisis, shares finished the session at $55.45. Vaccine developer Vaxcyte Inc. did the same, dipping below its June 11 IPO price of $16 for the first time on Tuesday before recovering some ground and finishing the day higher. The stock is about 70% below its intraday high set in September. Airbnb slid another 2.7% on Tuesday, bringing its decline over the past 5 sessions to 15%. That's the worst stretch of that length since Airbnb went public in December. In a note on Tuesday, Jefferies analyst Brent Thiel blamed the sector's sell-off for part of Airbnb's weakness this year. Despite solid 4-quarter results, its stock is down 29% since the print and flat year to date due to contracting multiples across tech, combined with final lockup expiration on May 17th and increasing investor concerns about sustainability of growth, longevity of use cases that emerged from the pandemic, and inventory availability. Short term, we believe the stock is in a holding pattern given these overhangs. DoorDash on Monday had its worst session since going public in December. The shares have lost more than a third of their value from their intraday high and are within about 20% of their IPO price. Despite an 86% pop in their debut session, they rose 3.4% on Tuesday, recovering from another opening trade in the red. Coinbase, the cryptocurrency exchange that went public via direct listing in April, also closed higher after tumbling intraday. Shares set a new low before the weekend. Now that we're talking about cryptocurrencies, let's talk about this new deal Peter Thiel is backing. Thiel-backed block.one injects billions in crypto exchange. Some of the takeaways here: block.one's EOS token surged about 50% after bullish unveiled. Funding round includes Alan Howard, Louis Bacon, and Richard Lee. Block.one, a blockchain software company whose longtime backers include billionaires Peter Thiel, Alan Howard, and Louis Bacon, is launching a crypto exchange that seeks to combine attributes of traditional bourses with the benefits of decentralizing finance. Bullish as the exchange will be known, is being capitalized by block.one with about $10 billion in digital assets and cash. That seeding for bullish global includes 164,000 bitcoins valued at around $9.17 billion, 100 million in cash, and 20 million EOS tokens, which power block.one transactions. A funding round raised another $300 million, block.one said in a statement Tuesday. The exchange is seeking to leverage existing blockchain technology with the decentralized architecture of DeFi that has grown in popularity for maximizing yield-generating strategies. The announcement follows Coinbase Global Inc.'s debut last month on the Nasdaq, which initially valued the largest U.S. crypto exchange at more than $100 billion. The price of EOS surged almost 50% in the wake of the announcement to around $12.72, according to CoinMarketCap.com data. Developer interest. It also appears to be a significant step to revitalize block.one's EOS IO technology, which has faced headwinds since it ran the world's biggest ICO that netted $4 billion in 2018. While some of the money has been used to build out the EOS blockchain, much of it was simply invested in assets such as government bonds. Additionally, EOS has recently seen declining developer interest, a yardstick for a project's promise and health, according to a report from Electric Capital, a venture firm that invests in crypto startups. Other prominent investors participating in the funding round include Hong Kong tycoon Richard Lee, German entrepreneur and investor Christian Angermeyer, Michael Novogratz Galaxy Digital, and Numero Holdings. Bullish will offer institutional and retail investors market making, lending, and portfolio management services without use of intermediaries like banks. The exchange is deemed to offer institutions and individuals better and safer access to the latest cryptocurrencies investment strategies, block.one Chief Executive Officer Brendan Blummer said. And that pretty much wraps it up for some of the highlights of today's news. Thanks for watching.